At BMO ETFs, all our investment tickers start with Z. That's right, Z, not Z. From ZSP to ZEB, we build solutions for the Canadian investor. So next time you invest, consider a Z instead.
Hey everybody, it's Larry Berman here. Another interesting week. Markets seem to be showing some modest, very modest signs of fatigue. But when you look at the leadership and the speculative leadership, and let's call that crypto, AI, outer space, tech in general, compared to the boring economy-centric stuff like consumer staples, consumer utilities. When you look at the differences, you can see this market is more growth speculative than it is fundamentally, robust economy. Anyways, let's dive into the chart room and see what the pictures are telling us. So volatility crush in the last couple of weeks. But a crush, but not when you look at realized versus anticipated. We're seeing quite a divergence there. So realized volatility has come down considerably. But forward volatility markets are still very, very concerned that a risk event, is coming. Many of you may not know this, but Q Wealth Partners, the firm that I founded with some of my founding partners, runs a global macro fund for or with the help of Andy Constant. Andy's a former Bridgewater, Brevin Howard strategist that's pretty prolific on social media these days. I think this week he was on CNBC a few times talking about different elements of markets. Friday at the close, Andy recommended a trade for us that we put on where we're going to be long August vol, VIX futures, and short September. So here I've got the spread trade here loaded up. And what you can see here is that, we did the trade at 165. So right here at the close, where you see the spread there. If we get a risk-off event and vol spikes, so, going back to April, you can see what happens to vol when it spikes. Even in a modest spike here, what we're likely to end up seeing here is that this will invert. And so this credit for us will turn into something we can sell at a pretty significant, profit for us. So we would expect more movement in front month vol than in some of the back month vol. Anyways, it's an interesting trade. It sets us up for this for the next couple of weeks. Andy does believe the quarterly refunding announcement, at the end of the month could be a very big vol event, depending on what the Fed does here. So this is a part of the setup for that. It's also a little bit of protection around weekends, and who knows what you're going to get in terms of truth social media these days. Anyways, when we look at leadership, so AIQ is the ETF that we like to follow for the AI trade in terms of what's going on. 2 weeks ago, breakout reversal. We got a test of that high this week, and on Friday, a little bit of selling into the high. By no stretch is this a confirmed reversal, just the identification of a little bit of resistance there. So, leadership, what other places in leadership? Tremendous amount of speculation in the space an exploration ETF run by ARK. Massive move up here in the last couple of weeks here on the breakout. It's gone parabolic. To me, pretty high risk. You don't want to be here. You don't want to chase. You want to tighten stops. But this is, again, another area far more speculative. By the time there's a human being on the planet of Mars, I won't be on the planet. I'm pretty sure my kids won't be on the planet, but who knows? There's a lot of speculation in that area and very little earnings to back it. When we look at another area of speculation, we got a bill passed through parts of Congress this week on crypto. There's a lot of speculation here. Price action this week, gap up on the news, selling into it. We'll see how that plays out. But if you're going to get involved here again, you want to look at this breakout here and say, bottom of the range. If it breaks through that, look out below. But that is a pretty broad stop from where we are now, pushing on 15, 18% in terms of risk. And so I don't love the risk return here on crypto. But again, message being not from a trading perspective, but just on where the leadership was, the speculative leadership and what's going on there. When we look at broad tech, again, breakout in terms of XLK, the large cap tech ETF in recent weeks. Friday, a little bit of selling on a slight gap higher at the open. What does that mean? It means nothing. The trend is still up. So as long as the trend is still up, we're okay. We mentioned last week, you got to trail your stops up here under the previous lows, because when this thing breaks, it's likely going to break. Hence why the VIX position we put in our global macro fund this week. When you look at the boring part of the world, consumer staples, what's gone on in the last year? Absolutely nothing. You clipped your coupon, you got a little bit of volatility, time passes. So if this was a broad bull market, consumer staples should be doing well. They're not. This was a broad bull market. Utilities should be doing well. You look at the same picture of the last year, but on utilities, we had a little bit of a breakout today. So this is one to watch here. These are sensitive to interest rates. Again, depending on what happens in the quarterly refunding announcement on the rate front, do they fire Powell? Can they fire Powell? Does it mean anything? What's going on in rates? So we've talked about TLT. We've talked about long bond yields north of 5%. We like them a lot here from a tactical trading perspective. Utilities on this marginal breakout here, confirming that a bit today. So, message here, market speculative, some money flowing back into the defensive sectors. Maybe it's time to take a little bit off the speculative names here in your portfolio. Just trim a little bit, tighten up your stops. I think that's the best advice I have for everyone this week. Have a great one.